A very good evening to everyone. Hope you're all safe, healthy, and are doing well. Like we started off by saying that knowledge is like money. To be of value, it must circulate, and in circulating, it can increase in quantity and hopefully in value. With that theme, I welcome you to the third of our webinars, this time on CARO 2020. For those of you who are joining us for the first time, a quick introduction, a quick background about us. We are here after having spent over a decade in financial reporting, auditing, and advisory. We want this to be a knowledge sharing platform. We have lots to learn from you, from your experiences, and we have as much to share. So this is actually a part of a series of update sessions or webinars that we conduct. This is the third of the webinar that we have conducted since we went live in July this year. And we hope to continue to keep sharing knowledge and learning. The topic that we have for today is a very contemporary topic. It is a two-part session, two-part webinar that we are going to have. The topic is on CARO 2020. Friends, the year-end audit is just around the corner, and CARO 2020 is going to be a major exercise for this year's audit. Originally meant to be implemented for March 2020, but given the time that the guidance note came, the pandemic came, it was decided that it would be made effective from the current year end. And the theme that we have for this CARO webinar is that a stitch in time saves 9. And I'll demonstrate to you why that saying is very, very apt in the case of CARO 2020. To give you a quick headline about what is CARO 2020 and why we are all here. The whole objective of CARO 2020 is to help facilitate and strengthen the entire corporate governance framework and improve the overall quality of reporting by auditors. In the current market scenario, in the wake of the recent corporate frauds, the MCA has tried to put a lot more responsibility on auditors in dealing with these matters. As you will see, CARO 2020 is no longer for the finance teams and the secretarial teams. There is role for people from treasury. There is contribution that one will expect from the ethics counselor, the ethics team. If you are a lender, this is a great opportunity for you to start reading the financial statements of your borrowers. The audit report earlier was criticized to be a very boilerplate audit report, not giving a lot of information. That has changed. With the advent of key audit matters, auditors now report a lot more about the qualitative aspects of auditing. CARO 2020 takes it one step further. In terms of what has changed in CARO 2020, the biggest change is, or to give you a headline summary of what changes have happened, the first thing that has changed is CARO 2020 has now extended its scope to consolidated financial statements. Earlier, CARO 2020 or CARO 2016 reporting was only restricted to the standalone financial statements. CARO 2020 now makes it mandatory for consolidated financial statements as well. And from a consolidated financial statement standpoint, what is relevant is that the principal auditor or the auditor of the holding company now needs to bring in their consolidated audit report on CARO the qualifications or adverse matters that have been listed out by the auditors of the components. A quick point to be kept in mind is auditors of subsidiaries, associates, joint ventures, all of these are within scope when it comes to accounting or reporting on the component exceptions. Two important and interesting items to be kept in mind from a guidance note standpoint. The first one is that what is material in the context of the consolidated financial statements is a part of the principal auditor's judgment. That is to say that if the principal auditor comes across an exception in their audit procedures, whether that is material and reportable under CARO 2020 is a matter of their professional judgment. However, if the component auditor has flagged off something as material and has flagged off something as an adverse item, that judgment cannot be questioned by the principal auditor. So very important for principal auditors, for holding companies, that when the group audit instructions or the group instructions are rolled out, these aspects are taken care of. One will likely to see statutory auditors at a consolidated level spending a lot more time discussing some of these findings with the auditors of the components. CARO 2020 brings about three kind of changes, to be very broadly put. First, it introduces new clauses. The second thing it does is it enhances the scope of existing clauses. And finally, there is one clause which was more of a repetition, has been taken off from CARO 2020. And as I said, that there is a lot of guidance available in the ICAI guidance note. The ICAI guidance note on CARO reporting runs into 200 pages, and it is clause-wise guidance. If you are an auditor, please make sure you follow it. If you are management, this is what your auditor is going to follow. Start preparing. And at the end of the day, remember, the devil is in the detail. Once again, when we talk about some of the guidance in the ICAI guidance, I'll highlight to you why the devil is in the detail. You read the clause, that alone may not be sufficient for you in complying with CARO 2020. What are the common challenges we thought companies would face? And maybe it is still worth spending another 2 or 3 minutes on this before we delve deeper into the actual technical issues. In our mind, there are 6 items that one would expect to face as part of challenges when implementing CARO 2020. This slide is not hard to imagine. 200 pages of guidance. For your reference, CARO 2016 had 8 subclauses. CARO 2020 has close to 40 subclauses. So you are clearly looking at a lot more data that the auditor will start to audit. At the end of the day, all of this is management's responsibility. The auditor will expect the management to try and keep the data available, to keep the items for auditing handy. This is not something that the finance team alone can do. A lot of coordination will be required internally with the audit teams. There are a lot of multiple stakeholders involved. And finally, there are quite a few nuances, quite a few finer points that are there in the ICAI guidance note, which really makes it imperative to start working on CARO right away. If you are associated with financial services, it is the right time to probably start engaging with your auditors. Clauses related to reporting on loans and advances are having an industry-wide impact. Some of those items are very, very difficult for management to provide, and therefore equally more challenging for an auditor to audit. So therefore, keeping in mind with our theme, 200 pages of guidance, 40 subclauses, and we are in mid-December already. So this stitch in time is surely going to save you 9. We are not going to talk to you about each and every clause in CARO. What we have tried to do is to try to give you a thematic view of how CARO 2020